So understanding when there's the likelihood of having big moves, like for instance, in spring, is a tendency for the market to draft lower in equities. Okay, so stock indexes or indices rather, they have a tendency to draw lower and be bearish going into the summer lows and then going into a low in the fall time, somewhere between I've seen it in years of my career where it starts a move in August, the last week of August, but generally it's like between mid-September and the first or second week of November. You're going to find a seasonal low there. And all you got to do is look for what I taught you in the core content. If you simply just use that model, look for index divergence, SMT divergence between the NASDAQ, this S&P, and the Dow. I don't trade the Dow. Okay, I don't care about the Dow for trading purposes, but I use it for an analysis. Like Dow, I don't trade the dollar, but I've always used it as a barometer for Forex pairs. So it's going to be a diametrically opposed opinion held in dollar versus other currencies. Well, when you're comparing the three averages, S&P, NASDAQ, and Dow, and you're looking for a high to form in the spring, you want to see a divergence. One of those indices is going to fail to make a higher high. That's it. You have now witnessed the quarterly shift. Now, everything after that, start looking for market structure shifts bearishly on all time frames and look for the pattern that I taught you in the 2022 mentorship. And folks, I just fucking gave you an ATM that pays out every motherfucking year, and it gives you the bias going all the way into the summer. That's it. That's the key. That's the fucking unicorn you're looking for. Well, how about in the fall? You're looking for the opposite because seasonal tendency wise, you're looking for a low to form. So one of those indices are going to fail to make a lower low. Once that occurs, what happens? That failed lower low in one of those averages, that's simple Dow theory. Once that shift occurs and they go breaking their short-term highs, you're now in a buy model. What does that mean? You're just looking for longs, and you keep milking the longs with the largest leverage. And you can take shorts, and you've seen me do that. But the bigger moves, the longer protracted candles on the daily and 4-hour charts are going to be to the upside after that occurs in the lows in the fall. So between, like I said, think like the second week of September to the second week of November. That's your little sweet spot. And what you're looking is you're studying, kind of, you're like, can you back and tell me what you just said there again? I ain't looking at questions, but I'm sure it's probably what you're thinking. What does it look like? Where am I looking? What time frame? You're looking at a daily chart. You're looking for the highs compared between the NASDAQ, the S&P, and the Dow. Make sure I said that right. Those three averages, Dow, S&P, and NASDAQ. In the springtime, okay, April, May time period. In that time period, you're going to be looking for, as the market's going to be going up, it will be. It'll go up, and on a daily chart, one of those averages, and I don't give a flying fuck which one it is. I don't care which one it is. It's not a point of me knowing which one's going to fail to make a higher high. I'm just looking for that to occur. Once that happens, once that occurs, and then you start looking at the 1 hour and 4 hour chart to look for a shift in market structure, just like I taught in that 2022 mentorship. Once that occurs, you have watched the seasonal high form in the spring, and it's all downhill going into the summer months. Baby, if you don't know what that means, let me tell you something. Go back to your fucking charts. As many years as you fucking want, and just see how that is such a beautiful roller coaster into fucking profitability every motherfucking year. And you got clowns out there doing mentorships and signal services, and they're trying to buy all during that shit. And they're getting wrecked. They're getting destroyed, blowing out, and having to reset their simulator accounts. That's how the markets work, folks. And in the fall, on a daily chart, you're comparing the NASDAQ, the Dow, and the S&P. One of those averages are going to fail to make a lower low. All you're doing is simply waiting for that. You're simply waiting for that to occur. And once it does, go into your 4 hour chart or 1 hour chart and start looking for that shift in market structure bullishly. Once that occurs, you just watch the low form in the fall and just start looking for your best trades going long. You can, if you have not been trading at least for 2 years, consistently, don't fade what I just gave you. Trade only in those directions. And you're going to get the biggest fucking moves you've ever had in your trades. And you'll be able to trust that they're going to move a lot more than just 5 trade Larry in fucking Texas that wants to get 5 ticks and thinks it's a big deal because he's got 24 contracts on it. No. Mm-mm. You want big fucking runs, big price runs. And I have students that are going in the Robbins Cup. I just gave you a beautiful blueprint to work within. Think about that. These are market dynamics that, I'll have people come in. Oh, everybody knows that. Okay, show me your fucking trades. Show me your executions going into next year. Do it. Because I'm going to be doing it. Oh, yeah, I'm going to be fucking doing it. Live accounts. Oh, yes, I'm going to be breaking fucking hearts. Motherfuckers are going to have their heads fucking smashed. Yep, your results are shit. I'm going to prove it. So we've talked about market structure. And the only importance really is knowing what I just gave you. That right there, that element of seasonality and how those shifts quarterly occur, one in the springtime for bearishness and in the fall when it's bullish. And what does it look like? The SMT divergence or Dow divergence, okay, where one of the averages diverge. And then you're looking at that shift in the market structure on a 4-hour and 1-hour chart. Once that occurs, once that fucking occurs, that is it. It's on lock. It's done. Then it's going to start grinding higher. You don't think it happened? Look at your chart. Why do you think I've been buying? Well, I've been talking about it's reaching for relative equal highs. It's going up to an imbalance. This is SIBI. It's filling. That's why. That's why it's following that model. Those videos I produced in 2016. Well, no, technically that would have been 2017. Yeah, because it's closer to the August end of 2017 when the first mentorship group ended, and that core content was produced during their class. So yeah, it would have been, if I'm not mistaken, I think it's June. I don't know. I don't recall. I'm having a senior moment here. It's in there, but it's on YouTube now. But where I'm teaching how to find these like mega trades. Larry Williams coined a phrase called mega trades, where you find these big extrapolated price moves. And I was like, I want to know where they form, because in his teachings and such, he would show this and that, and I was part of this and I was part of that, and it didn't make any sense as to what was the real foundation of when did they occur. So I had to take a step back, and I said, okay, I'm going to go through all these fucking charts and run through with Super Charts, which is a program I used when I was a younger man, and TradeStation. And I ran all these filters through to find where there was a huge impulse for the markets to be sustained one direction for months. And when it was bullish, going up for months. Now, maybe there were, traders out there doing this, but nobody ever told me about it. Nobody said, only do this, because that's kind of boring. And nobody wants to write a book like that. They got to put 50 fucking indicators on there and different fucking harmonic names on shit, because that makes it, scientific. And if it's scientific, for fuck's sake, that means your in-laws are going to be impressed, right? So the only thing you need to know about market structure is those 2 things I just gave you right there. Sorry, WWA guys, you don't do that. Yeah, I went there. So the next thing you need to know is that narrative and bias. Okay, narrative and bias, they kind of go hand in hand, because if you either determine your bias, looking at the charts from experience, you'll right away know what the narrative is. Or you go in looking for the narrative, and then you'll arrive at your bias. So I know that probably just confused you, because a lot of you are struggling with bias. And what's the difference between narrative and bias? Well, let's go back to what I mentioned earlier about non-farm payroll. Let's assume that you watched my tweets, okay, and you're not a douchebag that's simply trying to take everything out of context. I said, you're going to have non-farm payroll, and people are about to get wrecked. I said, note the relative equal lows on the 5-minute chart on ES. Okay, so where did I take your attention to first? Below the market. So right away, your mindset should be, and this is how you go into 2023 with me. When I'm talking to you live, okay, I'm not going to tell you this is where you buy, this is where you put your stop loss, this is where you put your target. I'm not going to do that. Okay. I'm going to show you how you can stop wrestling with knowing where the market's going to go, because I've already taught you how to trade. I've already taught you what the patterns look like. You can get in there multiple times. It's easy to do that part once you know where it's likely to go. And you all know this. You know this. And many of you even say this all the time on Twitter, or you'll do it in your own video comments and videos. You'll say, I can see the entry pattern. And if I could just know beforehand, because the few times that you mentioned what you thought was going to happen, I got in, I took the trade. It was easy to trust it because you said where you thought it was going to go. I'm going to condition all of you to not need me in 2023.